the PE is 10, the stock would trade at 20. If the PE is 5, the stock will trade at 10. So you have the earnings per share, this number called your PE, your multiple. Take those two and you end up with the price of the stock. So when the stock is 60 and the company's earning $1 a share, that's a PE of 60, very high. So you notice that some companies will have very, very high P's. And now again, it's a very simple example because there's many other ways that analysts nowadays will look at value. They might use, for example, not earnings per share, but they'll say the company's trading 3 times revenue or X times number of people looking at a certain, it's all these, like they can even bring that how many people looking at the website. In the old days, in the late 90s, they actually started creating all these ways. They called it eyeballs. It's trading 8 times eyeballs. How many people are looking at a web page? There's all these different ways that people look to value companies. The most basic, simplistic one that we often hear about is earnings per share. What is the PE ratio? What's the multiple? So what happens is you have multiples for certain industries. For example, software, computer software. If you took all of the companies that fall into that industry of computer software, you get what's called the average PE. What's the average multiple? It's going to be one number. If you go into the automobile industry, you'll see a different number. You go into the financial services industry, you'll see a different number. You go into the dry goods or your supermarkets, you'll see another number. You go into advertising, every industry, biotech, you'll have another number. So what happens is analysts as a whole, there's people that are paid to look and analyze the fundamentals of companies. They come up, and it's really, again, it's the market that ultimately decides this, but when you take all of the companies within a certain industry, so all of the automakers or all of the financial services companies, they'll look at all of them and come up with what's called the average PE. The average PE of an industry. So let's say the average PE in the financial services industry is 5. I'm just making up a number. All of the financial services companies that are public, Goldman Sachs, this one, every one of them, right? They trade at 5. Well, what you'll notice is that some of them will trade higher than 5.